All right, today's April 1st, and want to do a little market review, create our journal entries. There's a lot of price action from the AM session that proved to be worthy of documenting per usual. Um, so what I will do is go through my commentary, take my notes, take screenshots, throw them in my journal. At least, yeah, I have a journal here, other screen. I also have a bunch of pictures for that I'm collecting stuff. So we'll see what model works. I think, looking at pictures will probably be the best method for me. Videos also are helpful as well, given that they allow me to think my thoughts through. All right. So if we go out to the weekly chart for this week, this is something I need to get in the habit of doing. Not that I don't do it, but it would be helpful if we were to do it on like a Sunday. At least that's what I think. All right, weekly chart. Zoom out. Probably have stage one distribution here. We have a inverse fair value gap, stage one distribution or accumulation. Run up stage two, potentially in this fair value gap, sideways action. Now we're just moving sideways. So we're stuck between March 24th, March 4th, this range, and looks like this range down here. So we have some liquidity building up down here, although I do believe liquidity will be down here. So we're just moving sideways in between that range. Um, Previous week's high is right here at 620. Previous week's low is 38. We do have this bullish shorter block. You can see this is a change to delivery, but ideally this is a bullish shorter block where we can very well come down to and continue to the upside. We also have this constant crossroom which we tested last week, came down, and now I don't know what we're going to be doing for this week. I don't know what the weekly profile is going to be. We do have this week, well, this week. We had some economic news this morning at 10, JOLTS opening at 10, ADP non-farm payroll, and Powell speaking on Wednesday. So there's a lot of landmines, in my opinion, for this week. So, you know, best thing we can do is just play intraday price action, not to be too gun ho on a bias. We have a fair value gap, BISI, that we've been tapping into. Just again moving sideways. Low, high, lower low, bullish shorter block right here, which matches up with this fair value gap. So we could very well see a dip down into this and move up higher. Taking out these highs up here, or taking out these lows down here, which again, low, high, lower low. Another bullish shorter block, fair value gap. So this is the ICT, well, these people, what they call it, the unicorn setup. Going to the 4 hour. Mm, Again, bunch of sideways action. Traditionally, I usually do add the fair value gaps from the higher time from on the lower, but since I have drawings hidden, let's keep it off. So we are working within this 4 hour fair value gap. Again, sideways action. So what can we expect? We could get a draw on liquidity down here and a deep discount of this fair value gap. And I don't know what model we'll get, but that's kind of our unknown. And then we can very well move up there. We have a lot of equal highs up here, a lot of liquidity up here. Any bullish order blocks, or at least breakers? Low, high, lower, low. I really can't say there are, but again, from this range and here, this is where we're moving sideways. We are in a premium, so maybe come down, develop a fair value gap here, retest, come down, or just completely inverse this. If we do, we can probably get a retest back up here. Continue to downside. We do have a one, two, three, four, five. I'm not entirely sure what, if this is a one, two, three, four, five times four is 20. So I think this is like the daily, right? Monday at 2 p.m. all the way to 6. So not 24 hours, but close enough. So we could very well see a test on this is Q2. And as a matter of fact, let's increase this to like 10. There we go. Yep. 1 hour cycle. Again, we use the higher time frames to get an idea as to where we can go. I definitely believe we can go lower on the week, take out this liquidity down here in the discount and move up as far as which day that could be. Looking at the weekly profile, could be Wednesday. And these times they correlate with the quarterly cycle. I have not made the correlation yet. I will add this to my list. Q quarterly theory. Create list of QT cycles for 6 hour, 90-minute. Correlate with um, econ calendar thing to do. All right, so 1 hour. Well, we did have a fair value gap here, which we inversed. Fair value gap here inversed. Here we do have a huge bearish order block. Looks like we ran right into it 3 p.m. today on Monday. Boom, bearish order block. And now we're tracing back off of it. So if we want to have the bias that we're going to be bearish coming for these previous week lows in this fair value gap, higher time frame unicorn, it's best to see some type of market maker model to push us down into there, or some type of power 3 to push us down into there, right? And look at these highs up here. A lot of liquidity is up here. So do believe we can come down, be bearish, run up, come up for these highs up here. Tomorrow we could very well run up into this bearish order block again and continue down. So we'll play it by ear. All right, so now we'll look at our 15. There's a lot going on. We can ignore this. Let's have to go back through that and, just be better about taking my notes, um, taking images. Although I think I've done that. Most of them are on my phone, but nonetheless. So starting with our knowns, I'm gonna add this here. Knowns, unknowns. So coming in on Sunday, we had a huge open. So there's two knowns that we know, right? We have a new week opening gap in discount, and we have a bullish expansion. Now, as far as where this bullish expansion goes to, um, what is this? Tuesday, 9 a.m. So let's do this as well. And this is, I don't know why this is always set to 5. It's frustrating. I don't know, but it is default. Okay. All right. So coming in, we took out a New York AM session high, right? So bullish expansion to previous day New York session high. And we can add some notes. This is Tuesday the 26th. Tuesday, March 26th. Bullish expansion March 26th. So that was our draw liquidity per ICT. Only set up for life, one set up for life. Took out this high here, we kept going up. Are there any manipulation legs on here that would suggest that we move up there? No, there isn't. So, what quarterly theory or quarterly time frame did we take that out? We took that out in our Q2, 7:30 p.m. cycle. Q2, 7:30 p.m. took out uh, high, right? So another thing we want to do is start looking for our hunts in our Q2 cycles, 90-minute cycle, and that's what we get here. And then we go into Asia, right? Yada yada. So we're gonna hide this for now. Okay. So knowing that we have our known, now what we can do is draw our, we can make our, yep, we can make our, we could fib the expansion move so we know where our premium discount is, right? So these are all of our knowns before our alarm wakes us up at 4 o'clock in the morning, which is right here, 5 o'clock. It's the time we woke up. Now, one of the things that I want to pay more attention to is our Q2 cycle. If we take a look at that on our lower time frame, something interesting going on over here. Whoops, no, not that. Here we go. Okay, notice what we get. We get low, high, fair value gap. Low, high, fair value gap, premium, discount, crossover premium discount. Run up, take out that high. That's why I have this line here. Almost previous day high as well. Take that out. Come down. Credit 5-minute chain instead of delivery. Come down. And what do we get? Runs his fair value gap. Bulls are in control. Run up. What do we get? We can measure this in particular. Optical trade entry. Boom. So our unknowns is when will we get, well, unknowns, I'm just going to write it down, is our 5 minute change state delivery, which we got here. Unknown is what QT, what Corley theory will take out draw on liquidity, where, so well, I should put when for 5 minute state of delivery. Oops, we get it there. Also, our unknown is what setup will we get? Okay, would it be 5 minute change of state delivery? Would it be a optical trade entry? 5 CID, OTE, right? And then what quarter does this take place in is also important. Okay, what QT will take out your own liquidity? What setup will we get? Sure enough, we get a optical trade entry in Q2, Q3, or Q2, and down we go. One may ask, where's our manipulation leg? I don't see a manipulation leg per se. We could project this downwards. Force standard deviation is here. Stage one manipulation, or stage one, stage two, boom. I don't know. So what we also have is one standard deviation of the optical trade entry leg lines up with previous candles runs low, right? So OTE, um, so another unknown is OTE price legs projection, -1 standard deviation is in line or aligns with terminus of price leg and or previous price legs low, which you kind of get right here, and we actually went to it. Boom. So it's perfect. Accumulation, manipulation, distribution. A right here, M, and then we distribute to the downside right here. Okay. So going back to the 15, this setup is it's in the books. It's done. We have our knowns, the week open gap, bullish expansion, taking out a previous New York session high. Our our Q2, 730, took out that high. And then we can fib the expansion move from premium to discount, or for premium and discount to fine, move to fine. Now that's important. We'll explain why later. Our unknowns is, hey, yes, we're taking on a draw on liquidity. Yes, it's happening in Q2, although that's kind of iffy. But what setup are we going to get? In this case, we get a 5 minute change in state of delivery right here. And we also get a significant price run down and back up, which is into optical trade entry. Boom, we could short here. If we want to take it one step further, and we can find that on the micro level, we get a Q4 reversal. It's that simple. We have this low here. We can even take this up a little bit higher. Oh, no, that's correct. Right? Accumulation. See, we accumulate, manipulate, distribution. AMD. Run up, stage one, boom. 1, 2, 3, 4, 5 candle run into optical trade entry. OTE, 5 candle run into OTE, which micro cycle will it occur in, right? Which is Q4. Look at this accumulation, manipulation, accumulation, manipulation, distribution, and we go to 1.5 standard deviation. Then we move back up, optical trade entry, higher time frame, and then we continue going down. And look where 4 standard deviations is. Damn near the low of this price leg right here. Before we do it all over again, optical trade entry. No, 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 no. Ta-da. Here. Oh, shucks. Optical trade entry. And this is at 10 p.m. Fair value gap. Boom. Optical trade entry. Fair value gap. Boom. Here it is. Boom. If we come down 1.5 standard deviation, we almost got there, but not quite. Then you reversed up. So what's the point in saying that? Hey man, I don't know. Just trying to make this second nature. But there's a system that we have to follow, and I'm confident that this is a system that we will need to begin to follow. So this wraps up, and then we have our projections. I think we mentioned that already. We have this projection of the leg that we measured for OTE, and then we have our manipulation leg, right? Um, then AMD, AMD. This would be projection for manipulate leg. So that's it. So as ICT says, where is your next strong liquidity? We go at session, previous session highs and lows. And then we align that with our quarterly. Then we drill down to a higher time frame, a lower time frame, and we look for what? Our setup on a micro level. Here we are still in a premium. So to stay in on this position, that's valid because we're still in a premium. But given that we're done with this situation, What's the next thing that we could look at? Price leg in this one here. Fib. Reverse this. And what do we get? Again, 15-minute. From this high to this low. And this you can consider as stage two. Stage one, stage two, moving sideways, run up, sideways, and boom. This goes right into optical trend entry. Kind of see that one. Okay. Let's go back to, I think we want to go with the 15. I always have to come back and just snapshots, take snapshots. 50% of Q2, 90-minute cycle is here, so that's what we left over. Is it permissible for price to retrace back to Q2, 90-minute cycle? Absolutely. And that's what we did here. After we accumulate, manipulate, distribute. Move sideways, runs up again, distribute to the downside. All within a premium of this price leg right here. So went to 50% here, distributed downwards, and distribute. Let's look at the 5-minute on the measuring this price leg here. Optical trend entry. What do we get for optical trend entry? We're looking for 5-minute trade to stay delivery. We're also looking for potential 5 candle run into it. Stage one, vertical lows down here. Stage two, silver bullet, run up, sideways, manipulation into accumulation right here, and down we go from there. How significant is this manipulation? Here's 1.5 right here, and that's where price went to. 1.5 is where price went to. Let me get a 5 candle run, 1, 2, 3, 4. And looking at this price leg from here to here. Boom. Optical trend entries right here, and here we have a confluence. Negative 1.5 and 7.6 right here. So we measure this manipulation like here and this price like here to get a confluence, and voila, we do. This is the 5. And how do we know that we reached? I mean, we could see this as a 5-minute change of state delivery, although this one right here would be best. And we run up right into it. We don't close above it, close to it, but we don't. And boom. And then here we have a strong displacement leg down, into this fair value gap and a discount. And then we have a quarterly shift from Q2 to Q3, and then we explode up. So looking for quarterly shifts is also important, right? OT and quarterly theory, I have that down here. Also, we want to look at quarterly QT shifts plus, yeah, OTE, optical trend entry, and um, projections, man leg projections. right? Because we have this manipulation egg right here, right? It's actually this one. Yeah, I like this one right here. Boom, boom. I don't know why I had this one is a bit too low. I want to consider this as a manipulation. You want to go up here. I want to see from start here, run up, boom, 1.5 right here. Then we have a quarterly shift here. At Apple trade entry of this price leg here at the end of a market maker buy model. How do we know? Let's take a look here. This is the 1 minute. And this is at a time during London. Shoo. Right? I don't see any in this situation. I don't see any market maker bottom. Like this price action isn't the cleanest, but nonetheless, this is a optical trade entry of this price leg here, as well as a Q2 to Q3 shift. So the way we're doing these notes, or at least journaling, it is time consuming, and I mean it's a way to stay involved with the charts. I think like if we were to look at what we got going on right now, it's like whatever our knowns, what are our unknowns. Our knowns right now is we're in between New York lunch lows and this New York PM high, which at 4 o'clock. That's the range that we're in, and we're at equilibrium. So I don't expect anything. Here we do have a rundown here, boom, and we're just moving sideways. So I was looking at this earlier today. I'm like, hey, we're inside of a range, stay away. Look at this price action on the 5. Like this will just knock you around. Accumulation was like pulling out a Gatorade out of the freezer. And it's like not frozen all the way, it's slushy. So you shake it up, shake it up, shake it up. As the ice breaks, that's your account just busting, breaking. So we stay away from it. But yes, we did come into New York Open, as well as the bearish for the block on the 1 hour, which lines up with this fair value gap here. Interesting. And what we can also do here is this is equilibrium of this price leg. So going back to our paper, it's which combination do you want to use? Um, right. So I have Q2 shift, not in this case, but we have quarterly theory, OTE. That's one. Another one, OTE plus, high time frame, bearish block or order block plus fair value gap. Like these are the combination that we include. And you also have your New York Open here, right? And plus your New York Open slash Midnight Open. Okay. Um, what's more? Yes, we run into our Q2, let me add that in here too. OT, quarterly shift. QT, Q2, 50%, premium, or discount, right? So that's important. In this case, it's a premium to take our previous high. That's what happened here. Then we get a run up, still in the premium in the higher time frame. And then be boom, come down. And what happens when we come down? We run up, and I woke up and I saw this. And I'm like, we took out these relative equal lows down here. Took out these relative equal lows down here. So I'm like, all right, we should be going up higher. I'm bullish. 1, 2, 3, 4, 5 candle run into equilibrium. Sideways. Drop back down. And then we slowly grind our way over. Equilibrium. This is at 7 a.m. Then we die. So why is it so important? Well, accumulate, 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 accumulate. This is very weak manipulation. And then we just die right here. So another thing is it's OTE, Corley theory, blend the two together. It could be OT, Corley shift, right? I have that here. Um, Optical trade entry and micro QT, right? So look on micro chart for AMD. Now I'll just add that here. Plus AMD. Accumulation, manipulation, distribution. Now these setups that we see, we should be taking like snapshots of them so we have a better idea of what they look like. Like Corley shift, Q2 shifts, right? Corley Q2 shift. We know what that is. OTE, if we're OTing something, it's gonna be a price leg. And obviously gonna go rub back into it, like in this case here. And then we have a manipulation projection, which suggests that we are either at Q or the last stage of the market maker model, or we have accumulation, manipulation, distribution. So let me add that here. Man leg will either be end of market maker model or AMD. That's it. Boom. Ran up right into that. Nice. And do we have AMD here or market maker model? Stage one. Run out. Do. Stage two. Run up. Consolidate. Boom. Here's our last stage right here. Or you can see this as accumulation. Stage one here. Stage two. Boom. Run up. And we can measure this down. 4 cent deviations, projection. Here we go. Look where this lines up with. Look where do we go. Look what we have here. Come down, run up. What do we like about these? Right here, fit this, reverse it. Optical trade entry, not quite. But look what we have here. Equilibrium. run down again, run up, equilibrium, and then we just fall off. So you can see this as your twin setup as well, right? And OTE and your twin is ultimately the same thing, except there's twins is more specific. You have your 5 minute chain instead of delivery, and boom, flush. This is Q3, and I know what they, our Jamaican companion, brother man, was talking about. He was saying that you can split these cycles up in tries in like threes. So here's a first, second, and look what we get. A third. Douche. Move him over here. First, second, third, the last portion of it. Coming up. So I'll add that note in here. Try the micro sessions to align setup with periods. That's what I'll call it. So you can see here. Smooth this over again. I really have not identified the significance of it, but hey. Okay, moving over, looked at this equilibrium, and then down goes Frazier. Stage one is here. Let's look back on the 5. Stage one, stage two, and here is stage 3. And then boom. What do we get down here? Our manipulation leg. Project that up. And we get a smart money reversal. Right? So when we talk about manipulation legs, we'll need to add this one here as well. So this is more so, um, did we reach terminus here? Yeah, we reached like deep discount. Um, if we want, we can measure all the way to down here and fib. Come on, fib this. Oh, here we go. Look how that lines up. Then we come down. So we have, again, this is a quarterly shift, right? This is a quarterly shift, manipulation, right? So Q2 shift plus manipulation plus ends of market maker model, which will be at our manipulation will be the end of the market maker model. In addition, we do have an inverse fair value gap, which is right here. Right? And then we also have our 930 open. Here is our manipulation leg right here. Here's our drawn liquidity. Run up, Showing liquidity. We don't get our ideal market, our model 2022, but nonetheless, end of this market maker model from premium to discount. Low, high, lower low, bullish order block, bullish breaker. Kind of respected it right here. And then we go up here. I don't see any high, low, higher highs up here. And speaking of which, we might have had a SMT. I'm just looking. Look how this 5 minute or 15-minute change sale delivery is acting. Bearish for the block right here. Look how the buyer's respecting that. That's what we look for confluence, for confluencies. And look at this. Look how bearish ES was at 9:45. Nasdaq just shot up. Pew! We have this out here. Boom. So no SMTs, right? Um, we have this fair value gap inverse. So we got it. Again, what are we looking at right here is Q2 quarterly shift and a market maker model, manipulation, lower time frame, or what have you, as well as an inverse fair value gap. And then we take off, and then we have our manipulation leg up, manipulation leg projection, plus SMR, smart mode reversal at negative 2.5 STD, plus terminus of market maker model. I'm put in parentheses omega. And this right here isn't, it's like a reversal. Doo doo. See this? See how we came for London highs here? Look at this. See we came for London highs here? Manipulation projection, 271 plus terminus of market maker model, plus previous session high slash low. In this case, it's London. We took it out right here. Also, 50% of this. All right, that's on the 5. On the 15, let's take this off. Oof, so many things to look at. Model 14, I don't have here. I'm not gonna add it. We'll just have to memorize this. We have another fair value gap inversed right here. Let me get this run up. Let me get this run down. Up here, what we got were our twin setup. A very high probability twin setup. Why? Because we have also 5-minute change of state delivery. And we hit terminus, so we can expect a market maker model to be created. In this case, sell side. 1, 2, and then I will consider this right here as 3. Look at sharp down. Phew. And this is 2 standard deviations of what? Let's go down to lower time frame. This high to this low. This is not our manipulation leg. This right here, one may argue is our manipulation leg, and what do we get? 4 standard deviations. Accumulate accumulate, take these lows out, no displacement, failed displacement manipulation. Now we get our fair value gap. Run up optical trade entry. Don't believe me. Boom. 4 standard deviation of this manipulation leg lines up with 2 standard deviations of this projection leg here. So that's another one. All right, so that's good. What else? We also went into our um New York Open in our come on. I wanna is it this one I wanna look at? Yeah, here it is. Here we are. We ran up into our midnight open. Come on, man. Midnight open as well as our New York Open. So we're in a premium within a premium. Like so many PD arrays. It's unbelievable. This price action was awesome. You can literally have a checkbox. OTE, manipulation, boom. Terminus, boom. Market maker, model, omega, boom. Midnight open, New York open, boom. Previous session high, boom. ES, weak as shit, boom. Like how many PD arrays do you need? Inverse fair value gap, deep discount, and then for the rest of the day we just move sideways. So we saw this one here at 5 o'clock. 5 o'clock might not be the optimal time to wake up. Maybe 2 o'clock. Accumulate, manipulate, distribute. Here, I'll show what I mean. Wait, what? Here, I'll show what I mean. Yeah, keep them here. Here we go. Right here. Boom. Here's your 4 standard deviation. Take that target. Here's 33 points. All right, so we'll continue doing this little exercise, going through the daily charts and just looking at accumulation, accumulation, manipulation, distribution, accumulation, manipulation, distribute. Anyways, we'll continue to do this, and I want to just like completely clean this off. I'm not entirely sure if and when I'll go back and look at this, but um, we could just save this, and this could be like our journal. We'll just, rename this as journal. But we do have our combos. A1 is what we call it. So when we do look at the charts, it's like, what are we looking for? Now we know what to look for. Quarterly shift. Are we at a quarterly shift? No. Optical trade entry. Do we have a price late optical trade? No. Are we in premium discount? Equilibrium, which again, um, here we were at equilibrium. I think it's on this one. Right. So equilibrium is right here. At least was right here. Not here. It was a little bit higher. Oh, this open here. And we're just bouncing, 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 bouncing in premium, moving sideways. Manipulate. distribute back down. So let's keep this journal as journal. This I do want. Okay, so that's cool. Um, this is cool as well. All right, so we can save that. That's it.